Assalamualaikum, my name is SITI ROKIAH binti DAHRAN, and today I'm going to present the individual assignment, that is transmission mechanism of monetary policy. As we can see the table content, there are 5 points that I will simply elaborate and explain it. First one is the transmission mechanism monetary policy definitions, and in this point I will present two, that is the introduction, and second, what's in the monetary transmission mechanism. Okay, for introduction, the process through which monetary policy choices impact the economic growth, prices, and other aspects of the economy is referred to as the transmission mechanism of monetary policy. This is a complicated process with a lot of uncertainty, timing, and magnitude of the economic impact. In a nutshell, the transmission may be divided into two steps. The first one is that changes in the cash rate have an effect on other interest rates in the economy, and changes in these interest rates have an impact on economic activity and inflation. Okay, the next is what's in the monetary transmission mechanism. In this point, there are various things that are included in this transmission mechanism, including monetary policy, which is the behavior of central banks throughout the world that have a same goal. Price stability is the most essential goal of central banks, although low unemployment and long-term economic development are equally vital in this situation. Not only that, central banks can use a variety of monetary policy instruments to achieve their objectives, including interest rates, quantitative easing or tightening, reserve requirements, and interest on reserves. Then the changes in the official interest rate are often transferred to the economy through 4 separate but interrelated channels, that is market rates, expectation, asset prices, and exchange rates like in the diagram. Besides that, monetary transmission mechanism and inflation also included. Next is the channels of transmission mechanism monetary policy. There are 4 channels of monetary transmission that will be discussed, that is interest rate channel, bank lending channel, asset price channel that included Tobin-Skew theory and wealth effects, exchange rate channel, and lastly the balance sheet channels. The next point is issues in monetary transmission. It is essential to have a wide knowledge of these channels and their accompanying latencies in order for monetary policy to be successful. Through its effect on important financial variables such as interest rates, exchange rates, asset prices, credit and monetary aggregates, monetary policy influences production and prices, while changes in the economic structure tend to influence the consequences of monetary policy measures. And transparency involvement in the transmission process has also been the subject of current research. Then, lesson for monetary policy. There are 4 things we can learn from our knowledge of the monetary transmission mechanism. Firstly, associating monetary policy, loosening or tightening with a reduction or rise in short-term nominal interest rates is extremely risky. It is because nominal interest rate changes do not necessarily correlate to real interest rate movements. Secondly, other asset prices aside from those on short-term debt instruments include essential information about the state of monetary policy, since they are major transmission channels for monetary policy. Thirdly, even if short-term interest rates are already near zero, monetary policy may be quite successful in recovering a weak economy. And lastly, avoiding unplanned price swings is a key goal of monetary policy, giving justification for price stability as the principal long-term goal of monetary policy. We can see that the transmission mechanism monetary policy has a big role in the economy, that there are many additional studies about this for these developing nations. Also, some studies additionally describe the characteristics that influence the activeness of the bank lending, such as bank size, liquidity, and origin. These studies, on the other hand, are mostly focused on bank lending from the traditional banking system. This means that it is very crucial in having the monetary policy in our nations. That is all for me. Thank you.